Today we are going to have a special webinar. As I told you, it's about fundamental analysis, and it will be about the truth behind fundamental analysis. I will show you what news releases should you avoid. Also, I will show you what possible setups you can have on some important news. But I will not show you today how to trade some news. That will be maybe a special webinar. If you remember, me and Chris had a special webinar about NFP trading. For all of you who missed the webinar, I think that we will have it again. There is a special way of trading method that you use for trading NFP. So today it will be about fundamental analysis and what news you should avoid and what news you can trade. Also, before every start, as always, prior to start of webinar, risk disclaimer, risk disclosure statement, and by accepting you will proceed further with me. Okay, today's agenda. What is fundamental analysis? I actually forgot to put a question mark. Okay. How to solve conflicts between fundamental analysis and technical analysis. How to read FA data, most important news release data, and the effects of important news, and how to deal with fundamental analysis. So what is the fundamental analysis? It's basically the analysis of the overall state of the economy, of interest rates, production, earnings, and management. Fundamental analysis is the interpretation of statistical reports and economic indicators. Maybe 10 years ago, if you look from today's perspective, it was basically a decade where we could trade more or less safely with well-known environment, with less risk, with maybe a more static environment without those many fundamental releases. 10 years ago, if you watch, let's say that Forex Factory calendar existed some 10 years ago, and if you watch, let's say that 10 years ago, the calendar, you wouldn't see Spain or Cyprus fundamental releases. ADP would have been one of the strongest releases, also with NFP. So actually we would have maybe 2 or 3 major releases during the month which can influence the price. Today it seems like that each day we have around 10 fundamental releases or news that can affect the price. Well, is it all the truth or is it all a false? You will see during this webinar. Fundamental analysis maintains the markets, that markets may misprice a price in the short run, but that correct price will eventually be reached. It is very true. Some fundamental news make a U-turn, a complete turn of the price in a given release time, but eventually correct price is reached, and that is always like that. Profits can be made by purchasing the mispriced pair and then waiting for the market to recognize its mistake and reprice the exchange rate of a pair. Usually what that means translated to Forex market is you enter a position, and let's say there is at the first 5, 10, 12 minutes, I don't know, 1 hour, your trade is in profit. And then some fundamental release or news takes in, and your trade is no longer in profit. Your trade has made a U-turn, and now you are in a loss. And your psychology would probably tell you, okay, I will close the trade and I will re-enter the trade. No, you shouldn't do that, because eventually the mispriced pair, which is that which we purchased, will recognize the mistake and reprice it again. The only problem there is, where is our stop loss? Usually what happens is, after that mispriced correction or mispriced because of that news release impact, prices tend to go counter of our trade in a contra direction, and then they usually are repriced and they get to correct tracks. That happens all the time. And if you remember, that happens very, very often on euro dollar, not so often, but almost, let's say, not as often as euro dollar, but also on cable, on all other currency, major currency pairs. Well, I can say that fundamental analysis tends to have a broader impact on the market than technical analysis. What it means is, I will show you later, not the actual release. Usually the forecast has broader impact. But that is very true, and I will show you later why. So we can say that the market is in perfect equilibrium when fundamental analysis goes along with technical analysis. That means that fundamentals perfectly followed the technical analysis. There is a time when we usually make good profits. So let's say that fundamental news release, let's say German IFO, let's say numbers, and get very, very good. And we have already been in a trade which is in profit. Usually, if that happens, we will be spiked up. So that means that the profit will make an additional profit. That will be a profit on the profit. So instead of 20, 30 pips, we can get 50 pips in a spike. But that would mean also if we trade, let's say that the numbers came good and we actually were long in a price. But what can happen if the price get bad? That means that the trade, which is in a profitable position, can make a U-turn and completely reverse the trade. What that means translated to foreign market is, if our stop loss is too narrow, we will actually lose the trade. So where should we put stop loss? That is our technician's job. After some 30 minutes, price makes another U-turn and now gets in the right direction. Even though the news was very bad, it made a U-turn and went in its technical direction. So that would mean that you shouldn't make any trades after 30 or prior 30 minutes or 15 minutes prior or after the big news release. We will see what are big news and we will see what are less important news. So, how to solve conflicts between technical and fundamental analysis? Intraday analysis should always be made prior to any potential trade in the market. You need to get to know the pair which you will trade. You should always check your calendar first for any red news, and I will show you that later. Unexpected events such as central bank interventions and natural disasters cannot be predicted or controlled. It is the risk you need to take, and it is the risk which is associated with Forex market. Always respect and follow your charts. Don't trade 30 minutes or 15 minutes prior to big news. Unusual spike in the price is probably led by some news release or rumor. Usually what happens is that we have a nice trend, as I said, and then bang, something can happen in 15 minutes. There is usually some news release or rumor. That is what we need to be prepared of and prepare for. After that, the price will make possibly another low, then continue. And that happens all the time. The price tends to correct it afterwards. We can use fundamental analysis as guidance, NFP, but we cannot know the technical levels just by using fundamental analysis. That is, if you trade only fundamental analysis, that is gambling. Fundamental analysis misleads technical traders by spiking the price. Always believe your charts. They tell you everything. We will see why. Don't trade on bid rate days prior to NFP, stress test, Fed, or ECB conference. There are some exceptions that you can scalp prior to NFP, but I usually would not take any trade on these special days prior to Fed or ECB conference. Next thing, what I would like to say, how you read fundamental analysis data. I use and I personally recommend Forex Factory calendar. Usually the form of other site which contains data for news release will be in this format: date, time, currency, data release, actual, forecast, previews. On Forex Factory calendar, which I use, the format is date, time, currency, impact, detail, actual, forecast, previews, graph. Date is the actual release date of fundamental news. Time presents and represents the time when that news will be live. Currency means which currency will be impacted by the news. Impact is represented by icon, which can be yellow, orange, or red. Yellows means that their impact is very relevant or trivial, while red is very dangerous, can make a U-turn. Orange news are in the middle, they can be neglected. Sometimes orange news will move the price in, well, slightly beyond the range or slightly in contra direction, but eventually it will be corrected. You should be aware of red news, but also not all the red news are of same importance. If you click the detail, you will see what are basically the details of those news, of the news. Actual is actual release, which came when the news release get live. Forecast is usually a forecasted data release, and previews was previous release. Usually we can see what the impact level it will be when actual is below or above the forecast. You should click details and you will see that there. So if you click detail icon section on Forex Factory calendar, it will give you a complete summary for that news release. As I said, the actual release usually comes in two colors. If it's neutral like this, it will be the same color as forecast. If the actual release is better than the forecast, then the number will be highlighted in green. Vice versa will be for worse numbers. You need to log in with your username and password to use correct time zone. When you make a Forex Factory account, it will recognize you need to enter your time zone, and your calendar will recognize your correct time zone, and that time will be placed accordingly to the city you live in. While trading, you should be aware, as I said, of red news, at least if you are trading intraday. Yellow and orange news can be dismissed completely. Although, don't be afraid of orange impact news, because they will have a slight impact in your direction or in a contra direction. Not every red news is equally strong. Usually 30 minutes after the release you can continue to trade, but some news require to stay off the whole day. That means if we have stress tests, if we have a bid rate, conference day, sometimes I do not take any trades prior to or after those news releases. I'm just not sure what the overall impact could be, so I stay away. I will tell you later why staying away is actually can be very profitable. Always, guys, pay attention to calendar. I made Forex Factory my default calendar because I have accustomed to it. I'm really accustomed to it, and I have use it. I've been using it for 5 years. So always pay attention to Forex Factory. I even use it when I started trading as a demo trader. And it's always do me good. Also, you can go to Forex Live site to get actual lifetime coverage. There is site which promotes only live Forex news. So you can see what actually is going on there. Now, I will show you most important news for euro and dollar, but that is basically the same with every other currency pair. Most important news release data for euro is those news which I have put in this template. Bid rate announcement, ECB conference, German economic sentiment, German flash manufacturing, PMI, when President of European Central Bank, Mr. Mario Draghi speaks, and German IFO business climate. Okay. Bid rate announcements. Pay especially good attention to bid rate announcements. They are always followed by press conference. And now this is the thing which is the very truth. Press conference has higher impact than actual bid rate announcement. Actually, 45 minutes after the bid rate is announced, ECB will hold press conference. This was the date when actually the rate was cut and we saw the drop of 300 pips on euro. Even more volatile it was while ECB conference is being held. What that means is, that every single word that Mr. President speaks will be measured. And what will be the impact to the market? The price will make this whipsaws. Don't trade that, okay? This is the actual, this is usual price on ECB conference. It doesn't matter what time frame you trade. Actually, there will be many whipsaws during the conference. And this is the truth. ECB press conference has more impact on the price than this news. I'm telling you from my experience. German flash manufacturing and ZEW economic sentiment are the most important, and I can say this is the most important release data on euro. ZEW sentiment represents the level of a diffusion index based on surveyed Germany as a leading European economy, institutional investors and analysts. It's a leading indicator of economic health. Investors and analysts are highly informed by virtue of their job, and changes in their sentiment can be early signal of future economic activity. Those numbers are important. Usually what happens is, and I will show you that all later, when the price is green or red, that is important for us. Not this actual neutral zone. German flash manufacturing PMI represents the level of a diffusion index based on survey purchasing managers in the manufacturing industry. After ZEW economic sentiment, it may be the leading indicator along with German IFO business climate. Speaks, conferences, and bid rate announcements are different because they are actual ECB announcements. These things will happen each month and you should pay attention to it, okay? Each conference which ECB president leads can be very volatile, and that is the truth, and that is always, as I said, always is that ECB conference is more volatile than minimum bid rate or bid rate announcement. German IFO business climate represents the level of a composite index based on surveyed manufacturers, builders, wholesalers, and retailers. But it has significant level for London session market. IFO climate will not have so strong impact when New York opens. It's just connected to London session. And now, of course, USD dollar being a leading currency should and is having more news than euro, and that is perfectly normal. These are the news releases which I highlighted to be most volatile of all USD news. Now let's see what does. I won't now go into every detail, because if you click this icon it will show you the actual details for all. What does it mean to economy, why is that important, and so on. But let's say that non-farm employment change, or NFP, is the most volatile news release held each first Friday of the month. So every first Friday of the month has non-farm employment change news release scheduled. Also, unemployment rate is very important. It's directly connected to NFP. Sometimes those numbers of unemployment rate are more important than actual non-farm numbers. Then we have, of course, FOMC meeting minutes, which are basically very, very, very important. And even though the late New York session, they can make significant impact on the market. All of those other news, let's say these also unemployment claims are important, but not as non-farm employment change, unemployment rate, and FOMC minutes. After those red news, on the second place are all other red news, which can turn the price for that session. Okay, so those are the news which are included in New York session. And if the news is good for that particular currency pair, let's say USD, and actual trend was on, let's say, on euro dollar was uptrend, that means that euro currency is in advantage of US dollar, and the actual news come good for US dollar, that can spike the price, but in other direction. So you need to know that trading London session can be different if we have some of these news in New York session. So that is why I usually make a London trade, and after that I make a New York session trade. Okay, now I think that is clear to you. Now the other thing is ADP, some 2 or 3 years ago, it was one of most volatile news releases. Today ADP does not move the price as it moved it 5-10 years ago. Actually, I often have a position during ADP and nothing changes, because ADP is released prior to NFP, but NFP has more significant impact than ADP. Okay? The thing is, the most significant impact of all releases for US dollar, excluding bid rate and meeting minutes, has NFP. NFP has most significant impact. NFP can be traded, but only experienced traders should do it. Only experienced traders, and only if you know what you are doing. Okay? Now, for all other currency pairs, of course, is the same thing. For GBP, for CAD, for Japanese yen, for all other major currency pairs. So, check calendar for each currency pair and pay special attention to red news. Okay? General guidelines include pay special attention to all trade balance, bid rate, and speech conference of central bank's president. All of currency pairs respect session times. US CAD news are released during US session. Also Euro, Swissy and Sterling Pound news, they're released during London session, and GBP, Aussie, and of course Chinese Yuan are during Asia session. So for each of those sessions, they can make an impact on that session. Okay, that means that if US session was bullish, that doesn't mean that next Asia London session will be bullish. Special attention you should pay to positioning before and after the news. The thing is that the rumors and telltales cannot be avoided. That is Forex market. I always will tell few things about it just to remove the fear of Forex in your heads. As you remember, some days ago we had a bullish market on euro dollar, and eventually it was U-turn. What happened is that ECB member just spread the rumor and said the rumor that ECB may cut the rates again next month. That was the signal for major investors to cut off their long positions and reverse to the short side, or simply enough to press the button for sell or to exit their long positions. Is the same. Every sell, what you do if the market is going upwards will close your position for that lot size. So basically, if you exit the position, if you are long, that means that you are automatically selling into the market, okay? But that is the Forex market, and you shouldn't be afraid of that. That can happen, but at least it happens in Forex market. I can say in a in a lower extent, but much lower extent than in stock exchange market. If you trade stocks of firms, companies, so they have less impact than a stock exchange market. Eventually the price will correct itself, but it is enough that this can happen, and it will happen from time to time. But that is why your trades should be technically correct. They should be technically correct, so you should always apply a correct lot size so you are stress-free when you are trading. Big leverage, if this happens, can kill your account. So always have that risk in your head. That is the most important thing when trading Forex market. Okay, the effect of news release data can be checked under graph section of Forex Factory News Calendar. During the last few years, as volatility got much higher, some things have changed. Now, these are the rules which you should respect. We want to make sure that the reaction is logical, meaning that a good number is followed by a rally in the currency and the soft number is followed by a sell-off. That is what I was telling, perfect alignment of technical and fundamental analysis. Let's say that you have a long position in euro dollar, and actual news release for German IFO climate came green, better than forecast. That would mean that market will usually spike up, or even if it retraces, it will spike up, making a new high. So that is always the best thing. But we want to avoid trades where the number is good and the currency pair sells off because something else could be going on. In other words, either the market doesn't care about the release or there could be underlying weakness that is not immediately evident to new traders. I will show you that. I will tell you that. Why is that happening? We also don't want to see the reaction reverse in the first 5 minutes because that also suggests that the data surprise was not material enough for the currency to hold its gains. It can happen from time to time. You have a position, again, let's say long position, and then there is very good news for that currency pair, but the pair starts to drop. So there can be underlying weakness, but it is not immediately evident to new traders. When data surprise is significant, the initial move will oftentimes see continuation. That's especially important with GBP USD, as it usually is a follow-up. So that means that prior, let's say, to news release, we have a channel, let's see, on cable, but then some 10-20 minutes prior to news, the par starts to fall. And what happens is, we have still an uptrend. It doesn't matter if we experience some retracement. And sterling pound news, let's say they came good, we will see a big spike to the upside. Usually the spike in GBP dollar, sterling pound dollar cable is one direction. It will be down, or it will be up, or it will be down. So sometimes trading news with GBP can be very profitable by placing pending orders, but that's another subject. I can say that you can backtest GBP news on your charts. You will see that usually we don't see like this. The price will either go up or either go down on GBP, contrary to euro dollar, where it can make whipsaws. Focusing too much on forex news and fundamental variables has a negative effect on traders' performance. Price is the ultimate indicator. This is for me, this is the most important part of this webinar. Don't focus yourself too much on forex news and fundamental variables. That will have a negative effect on a trader's performance. Price is the ultimate indicator. Buy the rumor, sell the fact. That is what we often hear and what we often experience in forex market. The reason for this statement is because the big players in the markets, and this is the truth now, the guys who really make the market moves, mainly trade based on their expectations of the future, not so much on the facts that have been just released. The real surprises are if the numbers don't get released as we have expected. That is the biggest surprise. Let's say that forecasted, this is the next forecast for non-farm employment rate. So forecast is 204,000. Let's say 204K. That means 204,000. That is the number which, let's say, is forecasted for next NFP release. And let's say that that number comes in exactly at 204 or 200 with little deviation. It could actually make the market go down because everyone already bought into the market with an expectation of 200,000 jobs or more being a positive sign. So if the number comes out exactly or with slight deviation, 5, 10,000, no one is going to want to buy anymore because the number didn't surprise to the upside. So by the time the number is released, all the big boys have already traded their beliefs of how the expected number will affect the market. Actually, what we want to trade is totally different results than forecast. If result comes better than expected, usually we won't see so much price turns. But actually, if the number is good, but if it comes totally different than forecast, let's say bad number, that will make a totally change view of the market. So we want to trade is different results than forecast. Why? Because all of big boys are already priced in. They already traded their beliefs, how the expected number will affect the market. Those are big banks, central banks, institutional traders, big companies, those which basically move the market. Those guys, those firms, those institutions which move the market are already priced in, and they don't trade actual release. Now someone would ask me, how come then when numbers come out that move the market? Of course, but there are many retail, there are many less institutional traders which trade. Retail market in Forex is very, very big. Actually, market makers can also move market from time to time. But being in a right trend, in a right spot, is the only profitable thing. And by following big banks and big players, we make the money. So actually, we don't want to trade when they do not trade. We want to trade when big boys trade. So we want to trade counter. News releases are traded. Actually, I'm talking about NFP release. They are traded totally different than other markets, technical trading. So we want to trade different results than forecast. If we make a long trade and actual numbers kicks in, we will probably be in a loss because the market will turn. They have made the profits prior to NFP based on their expectations, and now they will close the trades. As I said, every close of a long position is automatic sell into the market. So what happens is the price goes up, it goes up, the numbers came basically as forecasted, and what happens is the market turns. Or if numbers came a lot better than forecasted, we may see a drop in the price, and then in next 2 hours there will be a rise. And that is the truth behind Forex market. Everything is priced in. Call it a candlestick. Call it a thick volume. Call it a pattern. It's already priced in. But now that is the case why we don't want to trade actual news release unless we are trading the spike. That is why I usually say I will wait for NFP number and daily close to base my next analysis. Be aware of that I'm talking about the most significant release, that is non-farm payroll number. And that actually doesn't have to do with anything for those other news. This is the most important figure along with bid rate and Fed minutes. NFP results can make next 2 to 3 week trends if numbers are far worse or better than expected. It can be a new trend or trend continuation. That is important why we usually want to see daily close to see if there will be a new trend or trend continuation based on NFP results. NFP comes on Friday, so actually that is also a conclusion of that week. So a lot of traders close their positions prior to weekend because they don't want to hold their positions by not knowing what can happen during the weekend. The problem with mid or long-term trading is that actual price may vary a lot because there are many fundamental shifts of price action during the week and month. As a price action trader, I believe that all fundamentals and Forex news releases are reflected in the price. The real danger for intraday traders is unexpected rumors, sayings, and speeches. That is the real danger for us. So take a look at cable reports at 10:30 to 11 a.m. Central Standard Time. You will notice how the pair moves usually in one single direction. It make it or break it, and usually it's like that with cable as I said. There are so many news releases that make only a slight impact of the pair being traded. So guys, pay attention to those numbers. Pay attention to Forex Factory calendar. And now, let's say again how to deal with fundamentals. Usually in other business, no matter, maybe you are a doctor, maybe you are a worker on I don't know. We usually say that if we work more and hard, it's better. So working more and harder is better. In Forex, more is not always better, and especially as it relates to analyzing Forex news and economic data. There is simply so much economic information available every day on the internet that we cannot make possibly use of every information. The analysis of increasing amounts of economic news variables will likely decrease our chances at achieving success as trader, because we will usually be overanalyzing, overthinking, and result over trading, possibly revenge trading a lot. So don't bother with news releases. Don't bother yourself with those. Market would usually wait for bid rate announcements or other important major news which can be followed on Forex news sites. If you see that the price has been trapped in a range for 3 or 4 days or even a week or two, as we had on euro-dollar some months ago, check the upcoming major news release. For starters, being an analyst, I will always update the blog, my blog, and state if there is congestion due to market waiting. Of course, you can read, and you probably read the blog under admiralmarkets.com blog. This is the address. I make everyday analysis on the blog along with Forex Factory thread. I will also mention that on session recaps which I hold each Monday. And now if you have attended last webinar, last session recap, you can see that we had a great week, especially with Aussie and with Euro and with Cable. Cable came to 63 as I warned you, and if you bought the dip in Cable, you could make yourself a really happy trader. You can make a pause of the month in trading. I hope that you have taken some of those setups. Now let's get back to this. Avoid trading red news 30 minutes prior and after the release. Wait for top of the hour, then place a trade. Those with more experience can trade spikes after the news. Those are NFP trading strategies for more advanced users. Me and Chris held a webinar about it. We can have it again if you want. NFP trading. Those with less experience should scalp up to 2 hours prior to NFP bid rates and conferences. Don't go in any trade 2 hours or less prior to NFP. Asia can be traded after the news. It's called spike trading up to London Open. On London Open, don't trade any news which were released during Asia session, especially on yen and on Aussie. We can make another trade only if London analysis, technical analysis, supports the fundamentals what we were given in Asia session. So those are the rules which you can deal with fundamentals. And of course, if you want to trade some of news, especially NFP is tradable news, we want to trade is basically not the expected number. We want to trade not expected number. Actually, we want to see a big deviation of above or below the forecasted number. So if you have any questions, you can ask me now. I think that this can be very helpful for you if you didn't know about fundamentals. It helps me a lot because I really don't care about those yellow news, orange news, and even sometimes I don't care about some of these red news. Of course, non-farm employment, unemployment rate, FOMC meeting are to be avoided if you don't trade the spike in the news. Now, for all of you who are following us, of course, on Spider's End, you could have seen my analysis today. And actually, it was again very, very profitable if you have traded it. It came to 36.10. I stated 20, but basically it came just a little 8 pips below that. And we had basically more than which I gave 35.80. Also, that was written on my daily analysis Admiral Markets blog. And what I want to say is, starting from next week, I will post euro, dollar, and cable very accurate intraday levels. So you can scalp on those levels. You can apply those levels to your templates, and you will see how good they are. They are actually scalping and scalp swing levels for euro, dollar, and cable, and they will be made separately from the analysis. So actually you can use it for scalping purposes. So now is the time, if you have any question, to ask me, and I will gladly answer. May market makers play a big role in Forex during the important news? As I said, not for every news. Just concentrate on those news which I have highlighted. Market makers cannot play so big role in Forex because there are also other more important players in Forex market that make more impact than any market maker. So basically, market makers can only play a big role while we have a bank holidays. And during bank holidays, retail traders and market makers play a big role only during bank holidays. Let's say if you open a Forex Factory calendar and you see there is bank holiday grayed out, that will mean that there is not time for you to play a trade, big trades. Go for scalps, because market makers and retail traders play a big role during bank holidays. But during the important news, they cannot play so big roles. Usually, more important players do that. Big banks, big hedge fund traders, big funds, they do that. Not market makers, okay? So don't be afraid of news. Just follow the guidelines which I have posted and you will be all right. And of course, I hope that you know which lot size you should trade, because it is very important to know. Are there any typical behavioral patterns followed by market makers, like dry up in London time and dry down in US time zone? Yes, there are some important patterns, but I don't have the time to explain it now. This can be a nice question for one of my next webinars concerning volume spread analysis, okay? Volume spread analysis will give the exact answer to your question. There are behavioral patterns like shakeout, reverse modes. I don't want to talk about that now, but volume spread analysis gives us the answer to that questions. Okay? Looking forward to volume spread analysis. Yes, that is a great tool to use, especially after news releases. So if you have, and we are glad to have Admiral Markets as brokers, because not every volume spread analysis works the same as for all brokers. I know personally that other brokerage feeds are a bit different, but since I use VSA from time to time, I can say that Admiral Markets have great feeds. It can help us, but of course, it's not perfect. now. The feeds are good, but VSA it's not perfect. But using it to actually trade with smart money is a very, very good thing, and volume spread analysis can help us a lot in achieving post-news results, and basically it's a great tool for trading. What charting tool do you recommend? For what charting tool? I use MetaTrader 4. To be honest, I know that eSignal is good. I know that there are other feeds and other charting tools, but for me, MetaTrader 4 is enough, really. I don't see any problem with MetaTrader 4. Okay. So if you ask me what charting tool I recommend, well, since I use MetaTrader 4, I would recommend you MetaTrader 4. There are some indicators called better volume indicators that can give us cues, but also there are some other things concerning volume spread analysis which we will talk about on that webinar. Okay. Okay, guys, if you don't have any questions, we will have a Thanksgiving in the next couple of days. But of course, now I would really like you if you apply, because it's free. And what is free, you know, everything what is free should be very glad to us. And we will have a special, again, session recap. And I hope that you at least get some pips of those session recaps, because I had some messages saying very big thanks to those session recaps. Some traders completely reversed their lost trades and they made profits with session recaps. So I really do that each Monday. So weekly recap, Euro, Cable, Aussie, and Euro Yen. Apply for that. Sign up for that. You will see it on next recap on 2nd of December, how many pips we got from last session recap. Okay. And of course, go with me, go with Chris, supply, demand trading. Everything is up to you. Yes, thank you very much for attending me. I will always strive to help you. Especially, it doesn't matter if you trade, if you are intraday trader, if you are experienced trader. We always are here to help each other. So I will always spread my knowledge to you, and that is basically what I love this job, and I am a four-year full-time trader, and some things have changed, and all of those things that have changed, I always insist on that, because market is not the same as it was 5 years ago, but we need to be in the market, in the business, to actually know what has changed and what has stayed the same. So thank you very much for attending the webinar. I wish you very nice Thanksgiving. Okay, great to meet. Okay, thank you very much for your comments. Not a problem at all. Happy Thanksgiving to you all. Have a great week. Don't trade. Relax. US market won't be live starting from tomorrow. But of course, on Monday, expect a new session recap. And I hope that you will make many green pips. Thank you very much, and thank you for joining the webinar. Bye-bye and see you.